Estate Collaborative for August the 13th, 2020. We're so glad you could join us this morning and be with us and the panelists that I will introduce in just a few minutes. Our meeting wouldn't be possible unless we had the support of some wonderful sponsors that Dan, our co-host and managing partner here on the screens, is going to run. So we have our premier sponsors, who are folks that have stepped up mightily to be sponsors. And I'll let you move the screen, Dan. Our first premier sponsor is Russ Keller with the Credit Law Center. They are a attorney-based credit repair. Chris Giannino, Moving and Storage. He's Simple Moves, which has been a huge local success story, and we hope will continue to be so. And there we go. The next person I'd like to introduce is Linda Borge of Dazzle Home Staging. She is also another very successful local business person who specializes in vacant staging. Next would be John Brandvine, a certified public accountant. John has many years of experience and can help folks with their tax strategies in their real estate investments, as well as interact with the IRS if necessary. And then we have Mimi Brandt of Chesterfield Title and Closing Services. This is a woman-owned title company. They do an excellent job in providing title insurance and closing services. And we, in fact, use them and find them to be really exceptional. Then we have Andrea Lenson, and she's with Design to Sell, and she does the occupied staging. And she's been a great, again, another local success story and a wonderful connector with all kinds of people. So if you want to know people, you want to know Andrea, not only for herself, but for who she knows. Moving on to our event sponsors, we have a good group of event sponsors who have been with us many cases from the beginning. The commercial bank, CNB Bank and Trust, I should say that Andrew Abrahams is the new name on that ad, and we need to change it. My apologies to CNB Bank and Trust. Marcia Russo with Old Republic Home Protection. She's been in the business a long time and really knows how to provide great service. We have Maria Angelova of Motto Mortgage in Chesterfield, providing mortgage services not only to RE/MAX agents, but to the entire real estate community. We have Brad Langeneckert of Langeneckert Homes, one of the top custom home builders in St. Louis. If you can visit one of his homes, you'll be amazed. Three Doors, James Manning and Ryan Wessels as his property buyers. St. Louis Real Producers Magazine, Nick Najar and Diane Collins. Brian McCrae of the McCrae Mortgage Team at Central Bank. We have Dennis Cooper, who is an expert in residential reverse mortgages with the Federal Savings Bank. Jim Colombo with St. Louis Paint Specialists, a real success story. Knox Malis with Integrity Solutions. Integrity does 1031 exchanges, as well as has great coverage throughout the region. We have our friend Dan Lewig of the Insurance Store. He's an independent insurance broker. David Fox of Carpet Masters Flooring and several other companies that are related to that, including hardwood. Andy Hickson, independent insurance broker with Executive Financial Group. Nathan Kirpin, Benchmark Mortgage, covering both Southern Illinois as well as St. Louis. Denise Reed of Paget Business Services, an excellent source of help for small businesses. Jeanette Neely of Nothing Bundt Cakes for closing gifts, as well as just for party gifts in general and for personal consumption. We have Troy Pieper of State Farm, who is an auto, home, and life insurance agent, been in business a long time. We have Don Thurman of Concert Homes, a home builder that does small to medium-sized subdivisions in the St. Louis metro area. And we want to thank also Deborah Russell of Legal Shield and ID Shield, and my partner and I, Rod Hamilton, who do short sale work as short sale specialists. Together, we have well over 75 years of combined experience working with realtors throughout the metro area to help them be more efficient in their work. If you'd like to check out our website, you could see that it was there at the bottom of the screen. So again, thank you to Dan being our manager for the webinar this morning. I'd like to now introduce our panelists, who I'm really thrilled to have with us. I'm going to give a brief overview of who they are, and then as I go, I'm going to ask them to kind of fill in some additional information. So I'd like to start off with Melanie Claborn, who is an investor, a principal in St. Louis solutions firm. She's a realtor as well with Keller Williams. And Melanie, I know you've done really well bringing yourself up by your bootstraps. Can you give us a quick background on yourself, please?
Yes, I can. A quick background would be I started real estate without having any business background. I was a stay-at-home mom. I actually was schooling my kids because I was living in California. And if you read about the California schooling in the 90s, you will understand why I brought them home. And they were doing some experiments out there that were just causing parents a lot of concern. And so the homeschool movement grew really big out there due to that. But that's basically running the home, running homeschool. That's all the business experience I had. So when I started looking into real estate, I had had a life crisis and I suddenly became single and realized, you know, I needed to do something different or we were all going to be really hungry. So I started working after 15 years of not working. It was really hard to find a job. So I finally found one as a server at a really nice restaurant in St. Louis. And I went back to college because that's the whole thing, that when you're growing up, you know, you go back to college and you figured, or you go to college, you get your degree and then you get your job, you stay in forever and then you get your nice house. And so anyway, I ended up with, in a very desperate situation. And I knew I wanted to do something different. So I kept looking and I found real estate. I worked at it for about 3 years, really hard, along with a full-time job as an editor. And ended up able to quit my job in 2017 and jump full-time into real estate, and was able to then again kind of be stay-at-home mom with my children. And I'm loving real estate. It's what I feel like I was born to do.
That's great, Melanie. Well, what a wonderful background. Many women can probably feel very inspired by that. I'd like to also introduce David Ounanian, who is an investor and principal in Transform St. Louis. He is also a realtor with Keller Williams. David, I know you've got a background from corporate America.
Yeah, absolutely, Barry. Thanks for having me on. So I was raised like most people, go to college and get a job working for somebody else, right? And so for 12 years, I was a software engineer. And little did I know that I was getting myself stuck in the corporate rat race. My income was going up, but so were my finances and my debt. And I was seeing how I was going to be stuck there for the next 20, 30 years with no way out. So that's how I found the magic of real estate investing and all of the promise of freedom that it brought to us. And in 2017, I bought my very first deal. And that's when reality hit me right in the face, that it wasn't as easy as everybody said it was. I made a ton of mistakes, but eventually learned from those. Started doing fix and flips, started doing rentals, and last year was able to leave my corporate job for good. And now I'm also an agent, so I specialize in helping new investors get started and start investing in their future as well.
That's great, David. Thank you. That's also a very inspiring beginning. And third but not least is Lucas Walls, who is an investor and principal in FasterHouse. He's also co-owner of WAP Properties, and he is a realtor also in St. Charles. And he's got quite a background that is still kind of mind-boggling. But go ahead and tell us a little bit about yourself, Lucas.
Yeah, thanks, Barry. Grew up in Defiance, Missouri, and kind of like David and Melanie, thought the way to the top was to get a degree, and so I did that in civil engineering. And next second I look around and I'm $60,000 in debt and a negative net worth. So I moved back to St. Louis and bought my first rental property in 2014. I still own that rental property to this day, which is exciting. So since then, I've added 115 more rental doors and added some key partnerships and partnered with Brian Schroeder at FasterHouse, and now we're flipping over, I would say, over 175 houses a year.
That's pretty darn amazing. So you've gone from being in debt to having a substantial net worth based on your real estate equity.
Yeah, it's pretty powerful. So everybody.
That is terrific. What a great story, and what a great story from all three of you. You're really an inspiration. Well, let's move into the. But let me just quickly tell you about my background, so you know that I have some connection to real estate. I've been in real estate over 50 years. The first deal I did was a land subdivision, small one, in 1968 in Vancouver, British Columbia. Wish I'd held on to that land now. It'd be worth 50 times what I sold it for, but it was still a good start. And since then, I've done about $350 million worth of commercial development. And in 2005, moved back to St. Louis. I say back to because I've been here twice before, including going to college in the area. And I got involved in a residential and became a broker, did some redevelopment work and some brokerage, and then finally got into short sales about 11 years ago with my associate Rod, and we specialize in short sales and helping people get out of trouble. So I have enjoyed my ride in real estate these 50 plus years, and it's fun to have it continuing. So let's talk about the market as we start off our seminar this morning. I'd like to ask a sort of a general question of the panelists, and you know, the answer doesn't have to be long. It can just be brief if you want. Where is the overall St. Louis market now? Melanie, do you want to lead off, please?
Sure. I feel like, I know this is a funny word, but I feel like it's pretty cheerful. I mean, buyers and sellers are doing their thing, and the low interest rates are benefiting the buyers. The positive people are still reacting just as if, before COVID, and they're eager to buy. So there is a lower inventory on the other side for the sellers as well. So that kind of benefits the sellers and sets them up for success. You present a good product, then you've got buyers who can get a great interest rate. So right now, I think it's just a pretty happy place to be. I'm conservative, but I'm very optimistic, and yeah, I'm excited about it. I think it's good right now.
How about you, David? Thank you, Melanie.
Yeah, it's what I've been witnessing is pretty crazy. It is an intense seller's market right now. I was just pulling some of the numbers to get ready for this meeting, and real estate agents, they often talk about months of inventory that are on the market right now. And basically what that means is if there's no more new listings that come out, how many months would go by before every house on the market is sold, right? And so typically a balanced market is going to have about 6 months of inventory out there. If we have more than 6 months of inventory out there, you're going to have what's called a buyer's market. Last time we had that was like 08 to about 2012. But right now, the June numbers just came in and we have 1.6 months of inventory out there. That means supply is extremely low. I was trying to go back on the statistics to see if it was ever this low in the last 20 years, and I can't find a month where it was this low. And then and part of that was with COVID. I'm also looking at new listings. So these are the new listings. I don't know if you can see the numbers here. These are new listings that have came out over the last couple months. Last June, so June 2019, we had 3,904 new listings come out in the St. Louis metro area. This June, we had 2,300 new listings come out. So that was a decline of over 41%. So we're seeing a major drop off of people going to putting their home up for sale right now. And then on the other end of the spectrum, we have tons of buyers, right? And that's because the federal funds rate, you probably can't see this graph either, but the federal funds rate over the last year has gone from 2.4% to now 0.09% interest. And so this is the rate that banks are able to lend with each other on. So it affects the interest rate that you can get. So right now, people with a 30-year mortgage, we just put somebody in last week at 2.75% interest. So anybody that was on the fence of buying a house is now getting out there and experiencing this market where everything is selling within the first couple days on the market. It's all going over asking price. People are dropping all their contingencies. It's nuts, Barry. It's crazy.
So we have different segments to our market, different sections or price ranges. And I know that there's probably some variance in the statistics in that area. Lucas, do you have any, what would you like to add to the conversation on what's driving the market and what are the differences between these segments? Because you're acquiring and selling, and I know you're right in the middle of it.
Yeah, so well said, first of all, David and Melanie. But yeah, on the acquisition side, buying houses at a discount and helping people get out of tricky situations, it's difficult right now because they know they can just throw their house on the market and it's going to sell on the first day probably. So, and we let people know that if that's the right decision for you, then do it, because you can get top dollar right now. We like to stick in our rehabs between $100,000 and $300,000, and that's the price point that we feel like there's the most buyers and those houses are moving the quickest. So we're going to put an awesome product out there. We got to be super focused on our quality still, even though it's a hot market. And we put a good quality product out there. We're getting offers over asking the first weekend every house we've done since COVID hit, which is crazy. I think only one house has hit the second weekend, but then on the flip side of things, if you're the buyer's agent right now, you're probably pulling your hair out because you're having to deal with 30 offers on one house for your clients. So it's tough. It's crazy. It's so crazy. It does make me a little nervous, especially going into the fall and an election year. So we're just trying to stick to our fundamentals, not get over leveraged on too many short-term loans.
Okay, that makes great sense. Let's move on into the primary discussion for today, which is how are rehabs and wholesaling working in the area, in the Metro St. Louis area today. So I'm going to mix up the order here a little bit so everybody doesn't feel like it's just the same order in every question. David, how many projects or dollar value do you take on to sustain your business?
Yeah, Barry. So
Wholesale flips versus renovations. What's your business mix right now?
Yeah. So when I get started investing in real estate, this was kind of a side hustle for me. So I did maybe 3 or 4 flips a year, and I'm kind of continuing that pace because now that I don't have my corporate job, I don't really want to fill up my whole week with another job. So we do 3 to 4 flips a year. And we're on pace to do that this year. It's a little bit harder to find the deals because of the inventory issue that I talked about earlier.
Is that moving you into a compromised position on the areas you'll go into to find the flips?
Not necessarily. We've always been kind of all over St. Louis, St. Charles. If the numbers work, we're going to do the deal.
Okay. All right. So you take the deal as you find it, whatever
Yep.
market it's in. Okay.
Yeah.
Melanie, how about you? What's your ratio of flips to buying another rental or renovating something for sale?
I typically do wholesale and flips, and then if I find a good deal on a rental, I'll hold it. I'll just grab
Okay.
it in the marketing process. So 2 to 4 is what I go for, closings per month, and I kind of aim for that. So it could be 2 wholesale deals and 1 renovation. It could be, some kind of, I need those closings, so I keep a track and I kind of market that way. So wholesale deals are probably, I do about 4 to 5 renovations a year. I'm starting my 4th one. And
When
so
you say wholesale, are you meaning acquisition to refurbish and flip then?
No, when I say wholesale, I mean, I'll put a contract on it and then I'll find a buyer for it.
All right. So you're truly talking about turning it around right away. So
Right.
how many of those do you do a year again?
Last year I did about 20. This year I've only done about 12. So
Still
it's
pretty-
a little little less this year. I had a family crisis in March. So April and May, I really didn't have any closings.
Okay.
But I had a good first quarter, so that was totally fine. And then I'm catching up now. But yeah, 2 to 4, 2 will sustain my business. 4 is, wonderful bonus. I'm doing a low volume, so the wholesale deals are important in between the rehab.
How about renovations? You're talking just about wholesales. Now, add to that component your renovations. How many of those are you doing right now?
Right now, well, I just sold one last night. We got 2 offers on that, so we were kind of jockeying back and forth on that one, and that's increased for. And then I have previously sold this year already 3 renovations, so that.
Okay.
And then I purchased one yesterday as well. No, Tuesday as well. So this week's been a really good week. I purchased one new renovation and sold one. So yeah, it's been really great. So
Congratulations.
typically around 4 to 5 renovations a year, and then the wholesale deals can still be scattered in between there. Probably around 20 of those a year.
Okay. So, Lucas, tell us what your business mix is in terms of wholesale, immediate resale kind of deals, rehabs, and then acquisition for rental. What's the ratio this year so far?
Yeah, so in general, high level, we're about 2/3 wholesale and 1/3 rehab. So
Okay.
I consider houses that I'm holding as rentals as wholesales because, we have a flipping company and then we have our rental company, and we actually pay our flipping company a fee to hold that property as a rental.
Okay.
That's just how we've always done it. It keeps the wholesale business moving, and we still get an excellent price on a rental. So normally we kind of stack up rehabs season out based on the season, maybe late winter going into the spring and summer. We want a lot of good quality rehabs, a lot of good inventory on the market. This year was a little different. Come March, beginning of March, kind of scared us a little bit, and we decided to offload as much as we can as far as what we have under contract to buy. So we pretty much wholesaled everything, and then kind of got into rehabs a little later this year, but had some awesome products hit the market. We do about, I would say, 4 to 5 rehabs a month, and maybe 10 to 12 wholesales a month.
Okay.
But I have an awesome team behind me, so it's not just me doing all this. I have an incredible team.
You got some acquisition people then out combing the countryside.
Got some great office staff, great acquisition guys, great disposition, great project managers. So that's why we're able to do this volume.
You got a machine going. Yeah.
Great team. Yep.
You've hit scale.
Exactly.
Good. Okay. So, have there been any adjustments in regards to how you've looked at your business with now the COVID-19 impact?
Yeah,
Melanie?
absolutely.
Go ahead.
Absolutely. You hear this all the time, cash is king, but you really don't understand it until, all your prospective revenue falls off a cliff quickly. So we just try to stay super liquid, and we're honestly keeping that position until we kind of see into all this. So we're trying to generate revenue now, which maybe that means wholesaling for a little less than we would make on a rehab, just getting that money now, keeping it moving, and keeping our leverage to the market, keeping our exposure to the market as low as possible.
Okay. How about you, Melanie?
Yeah, I would agree with that. Like even some of the renovations I've done this year, I didn't do everything I might have done last year. I tried to get in and get out as quickly as possible. For instance, the one that I chose the buyer on last night, and we accepted the contract. As of September 4th, I'll only be in it 90 days.
Okay,
So
that's perfect.
I bought it June 4th. So yeah, I'm trying to stack up my contractors and get in, get it done, and get out.
Very good. David?
Yeah, it's pretty much the same. So, before COVID hit, we were almost kind of still wanting to get in and out of our flips very quickly because I felt like the next cycle was kind of on, on the horizon, so to speak. And now with COVID, that kind of, put more focus on let's get in, let's get out. If we're doing a flip, make sure there's a good margin there for us to do it. So the one that we bought during COVID was in May, and we're going to be ready to list that in the next 2 weeks. So that was just making sure that we're on those contractors, that we're staying on schedule, and that we're not going to stay in it longer, ideally longer than 5 or 6 months. Real estate's kind of a slow moving cycle. So usually if you can get in and out in a couple months, you'll be just fine. It's the people that are holding on to properties for, 12 months or more, that all of a sudden the sale price that they were expecting is gone down 5-10%, and they're, in the red.
Are any of you having to go into what we might consider marginal neighborhoods to find your volume? Lucas?
There's a buyer for every house. If I'm going into a marginal neighborhood, I'm certainly not renovating that house. But as far as a wholesale deal, we'll maybe line up the end buyer ahead of time to make sure we have that thing sold before we get under contract, something in a marginal neighborhood that we don't want to end up closing on and, maybe hurting a relationship with a seller.
So you would be buying for, let's say you've give us an example of what you'd acquire it for and what you'd resell it for on average.
Yeah, so our normal wholesale fee is probably $12,000. So that's our normal profit on each wholesale deal. But in a marginal neighborhood, I would consider that house probably worth 20, 30, 40 grand. And if we make 10 grand on that and buy it for 30, find an end buyer for 40 and make a $10,000 assignment fee, that's a good spread for us on that low amount of investment.
Are you listing your own properties?
When I talk about that type of stuff, it's more off market. So we have a disposition off market, non-brokered wholesale manager that finds investor buyers. But if we do retail it, we have I wouldn't call it an in-house brokerage, but we have a brokerage in our office, Magnolia Real Estate, that lists
Right.
all of our retail.
Okay, so either way, you're going to still capture half the commission if you do list it.
Exactly.
Okay. All right. Melanie, how about you?
Yeah, I'm working in a variety of areas, actually. I do have buyers from other states, so they're interested in the cash flow. So I'm in areas that may not be somewhere that, some of us would want to live, but they're North County areas that are sometimes a little sketchy. But the high cash flow is what really they're looking for. So I do those, and I do turn those to them. My wholesale fee is a little bit less. It's anywhere from, depending on where the deal is, anywhere from $3,000 to $20,000, depending on where the deal is. But I also just purchased another property in Creve Coeur, and I don't feel like that I have to go into those markets. I just do those for my buyers. There's plenty of good properties in St. Charles. 63146 is my favorite zip code, and 63141 as well. So yeah, I don't feel like we're being pushed anywhere. I feel like properties are still available, maybe a little less because of people are not putting them on the market as much as they were last year, so the inventory is still pretty low. And as David said, it's lowest right now it's been for a while. So
is it fair to say that for the properties that are really up to snuff and really showpiece, they're the ones that are selling very quickly. But if the property needs work of some serious level, then you've got that's where you are, the ones that are functionally obsolete. Is that where you're finding your best opportunities?
Well, that's a really interesting thing to talk about too, because I'm looking for a house for my son and daughter-in-law, and we're looking for ones that need work, right? So that I wanted to find one that's in between. Like an investor won't buy it because they're asking too much on the MLS, but a homeowner might not buy it because they don't want to do the work, right? So I'm trying to find a house for my kids, and I will do the work. I'll get my contractors in there, and I'm telling you what, they put these houses on the market at a price higher than an investor will pay, but people are buying them.
Wow.
I've had 2 contracts in on those types of properties in St. Charles. Both of them were in St. Charles, and we got outbid every time.
My goodness. That tells us something about the stage of the market, I think.
Absolutely.
Yeah. David, what do you think?
Yeah, I've seen the exact same thing. It's hard to find something that needs work too, especially if it's priced right. But you know, buyers can put their own sweat equity into it and obviously pay more than an investor can pay to fix it up and make a profit on it.
So you're competing with that, beginning to compete with
Yeah.
that owner who's going to be willing to stay in the house while they do the kitchens and the bathrooms over.
Yep.
Interesting. That's kind of where the market was about 2005, 2006. Interesting. Not that it's exactly the same, the different factors, but it was
Right.
kind of getting hot enough that people were willing to do that. So we've talked a little bit about profit margin. And I guess the question is, I guess let me frame it this way. It sounds to me like none of you are willing to take much risk in this environment, even though it's hot and there's sales that are multiple contracts on. You're still cautious about being too exposed in this market. What do you think, Lucas?
Yeah, absolutely. You know, yeah, that's a fine balance for sure. Fine line there, because the market is so hot, and you want to make hay while the sun is up. But then again, you know, you got in the back of your mind what's on the back side of this. So I wouldn't call it being cautious. I would call it more sticking to your fundamentals and your core focus now more than ever.
Okay. How about you, David?
Yeah, for me, it's just making sure that I'm not going to get emotionally involved in a bidding war or attached to a certain property. It's just
Right.
sticking to the numbers. I think you asked for like profit margin, stuff like that.
Yeah, I'd like to know
a lot
that.
of times, yeah, a lot of times I can pay more than the big guys because I'm just, you know, mom and pop here flipping a couple houses a year. So typically I don't want to go into a flip and not make, you know, anywhere less than maybe 30 grand. That's kind of my bottom of the rung as far as profit margin goes. You'll see online a lot of people say, oh, you know, you got to be all in at 70% of an ARV. That just, I don't see it existing out there. It's really, really hard to make those numbers. So that, you know, that means that if you're going to make $30,000 on a $100,000 house, you're going to make 60 on a $200,000 house. I'm not seeing that out there right now with the limited inventory that's out there and the competitiveness on market and off market.
Okay. All right. So basically, I'm getting a sense, Melanie, you may want to comment on whether your risk, you've sort of talked about it, but how would you summarize your position towards being willing to take as much risk today as you were a year ago?
Well, I think David said it very well. The risk is always there. It's always going to be there. But with the way the market is right now, if you have a property that's in a nicer area and you do go off of your 70%, you move that up a little bit and say you're in for 74 or 75%, you know, if you turn a really good quality product that you could get over asking price. You could get 4 or 5, or I got a card yesterday from a fellow investor, 24 contracts on a property within 2 days. They had a weekend. And so they said they would look at all the contracts on Sunday night. They got 24 of them. So, you know, if you do, and there are escalation clauses in these contracts, and you just do a good job and you can come up off of the 70% up a little higher, especially in the higher price range properties. So yeah, there is risk, but always follow the formulas. There are times where you can fudge in the formulas and raise numbers a little bit, depending on the area, on the potential buyer. I always look at different areas have different potential buyers, and they all have kind of a character outline, an avatar type thing, you know, where you'd say, who is my buyer for this area? And you create one, and then that's how you renovate the house toward those buyers. So if I'm in Florissant, I'm not going to choose the same finishes I would choose if I was in Creve Coeur. And you just it's all a risk. Everything that you do with real estate is a risk, right? But yeah, I think we can move off of our 70%. I think that's the most cautious place to be, and it's a good place to be, especially in lower end areas. But I think we can move off of it with this hot market, knowing that we're going to get, if we turn it quickly, like Dave says, don't wait a year, but turn it quickly, we'll be able to cover the costs and make a profit.
Lucas has a built-in construction function, so that he doesn't have to worry about finding a contractor to do the volume that he wants. Sounds to me, Melanie, like you've got some strong contractor relationships that you can turn to that can get the job done in a reasonable time frame.
Yes, I do. I fostered some relationships over the years, and you kind of have to move in and out of contractors. Some are super busy right now, so I'm actually looking for new ones in certain areas, and it's always fluid. But I do have one carpenter, handyman guy, who pretty much sticks with me on every project.
That's great. How about you, David? How's
Yeah,
your contractor situation?
Yeah, much like Melanie, it's always been a revolving door. So we're always looking for new talent, better quality, lower prices, all that stuff. You can't, they make the analogy that, contractors like three sides of a triangle. There's quality, there's cost, and there's time. You can't have all three. You can maybe have two of them. And so we're always looking for that perfect contractor. And maybe like Lucas, the answer is to bring it in-house and manage it yourself. But they're still out there. There's still a lot of people looking for work. I've seen, because of the inventory so low, there's less people rehabbing houses right now. And so a lot of my contractors are looking for work.
Okay, well, that's a positive thing, because I know the contractors part of this whole rehab thing is so critical, because you either get an incompetent contractor masquerading as a competent contractor, or you have contractors that you do want to use that are just too darn busy and won't pay attention to you, or they'll take the assignment on promising you what they can't deliver, and then you're dragging it out and costs are going up and you can't finish the product. So that's a huge part of the successful story, I think, a rehab. Do you agree, Lucas?
Yeah, it's huge. And we've went through so many growing pains, finding the right contractors and, being screwed out of a lot of money and messing up a lot of houses for us. So we've been perfecting this for a long time. So just to clarify, what we do have in-house is a project manager. We have a project manager on payroll, and that project manager, manages what I would call our core contractors that are actually physically working on the houses. And those gentlemen or those crews are 1099, just like how everybody else pays their contractors. So, but our 1099 contractors pretty much exclusively work for us because we've given them consistent work over the past 2, 3, 4 years. And we do smaller cosmetic rehabs between $20,000 and $40,000. So our core contractors can handle, I would say, 80 to 90% of the work that's going on at the house. And then I think Melanie and David said this with the other trades, maybe your licensed plumber, your HVAC techs, your electricians, always be adding to that roster, bolstering that roster, having a first tier, a second tier, a third tier, and it's like a revolving door, keep adding to that list.
Excellent. I know that you really want to check the background of a contractor you haven't used before, because sometimes they haven't been in the business that long and have a totally incongruent other business that they are busy with. And probably the most ludicrous story I can relate is finding a contractor who also was a hairdresser. And that didn't work out very well.
Was it your hairdresser, Barry?
No, I didn't need much of a hairdresser still at that point. Neither would you, Lucas.
Yeah, no, I don't.
All right. I think a good part of why you all are successful is you figured out ways to find new raw material, new properties to rehab. You've got some kind of a marketing system that's working for you. Melanie, what are you actually doing to find the deals besides searching MLS? But by the time a property reaches MLS, the bloom may be off the rose.
True, true. Um, I do direct mail, and I also have an assistant and a student who look for properties and scour through, not necessarily the MLS. My son and his wife are doing that one, but they scour through the marketplace, Craigslist, and they do my follow-up calls for me. And so we find properties. Typically, you don't buy the property, and I think you guys would agree with me, the first time you talk to the individual who calls you and says, hey, I've got a property to sell, it might be the second or third time, maybe even a year later, that you actually get that property under contract. So it's a process, and I do a lot of referrals, and I get a lot of referrals back. So I've been working with, I've gone to some of Brian McRae's classes, and he talks about referral business all the time. So I've been incorporating some of that into my world, and I do have people who refer properties to me pretty much on a regular basis. So
Are you getting any referrals out of I know that you're active in some mentoring collaborative groups. That was in fact helpful to you getting your start. Are you getting any referrals out of those folks?
yes, actually, I am. They're coming from that direction too. So
That's wonderful.
that's been
David,
good.
how about you? What is your system of originating new raw material?
Yeah, so I'm kind of old fashioned. I have a $0 marketing budget. So I'm basically just referrals, just networking. And like Melanie said, I was in Brian McRae's class a few years ago, and that is awesome stuff. I just encourage anybody that knows Brian to reach out to him and get connected with that. It's really changed how I've been able to get free from my job through just people that I know and sourcing deals off market. The last couple of deals that I bought, I can tell you how it was. The last one was through the pastor at my church. One of the members at the church was having a hard time paying their mortgage, was able to buy that house. Before then, it was through my neighbor, one of her relatives where I live here, had a house for sale, knew that I was buying houses. Before that, it was sometimes I do buy from wholesalers, big time wholesalers like Lucas and other companies in St. Louis. I've gotten a few deals from them. But I'm also teaching my clients or my students on the agent side how to do this off market as well, because it's super easy to do. All you got to do is just tell people what you're doing. I'm buying houses. I'm looking for houses to buy. And when they hear about somebody trying to sell a house, then you're top of mind, and you can get in there and not have to deal with all the competition, because nobody knows that Aunt Sue's friend is selling her house except for you. So it's a big advantage to have that way of getting in there.
I know that this is a bit of a commercial, but I know that with you and some of your other friends, we've had you bring us properties that are underwater, and we've helped people do a short sale, and you've ended up being able to be the buyer. So that has been a way that it's less frequent today, but it's still happening.
Yeah, I think you're going to see a big uptick in that once foreclosures start happening again. It's a good business to be in, Barry, and there's going to be a lot of people that need our help to get out from under those.
Okay, Lucas, this is where I'm intrigued about your system. You've got an acquisitions team. How are they finding the houses without resorting to MLS?
Yeah, it's a great question. I want to first go back to what you said. Introing this question was, you guys are successful rehabbing because you're able to source new raw material. And I think we are successful rehabbing because we only are touching and rehabbing the houses that fit our perfect buy box. So you're right, we have to find those houses. Everything else we're wholesaling out. If it's not a perfect rehab in a perfect area, we're wholesaling it. And perfect's different for everybody. So, but how we're finding those. So About half of our business is what Melanie and Dave use of the word referral, but we call it networking or connectors in our business. And that's about half of our business. We're going to buy 100 houses almost without spending a dollar on marketing. And that's through wholesalers, real estate agents. It could be a bowling alley owner, a pastor. It could be anyone. Just share your story. Tell them what you love to do. And then you're going to start getting deals coming in. And then maybe that person is connected to multiple deals. It's not just that one. So, nurture that relationship, and hopefully that person can become what we call a tribe member and bring you multiple deals per year. So that's the one side of thing, is the non-paid stuff. The paid advertising, we have a pretty decent website that we've been working on for the past 3, 4, 5 years. And we get a lot of leads through that. We call that SEO, or search engine optimization. So if you Google, we buy houses, hopefully, or I need to sell my house fast now, hopefully our name comes up there, and you see our reviews, and you want to do business with us if you're a seller. We used to do Google AdWords, and that's a pay-per-click, and we do not do that anymore because it was really expensive and it was not working. We still do direct mail. We do a lot of niche lists, and we've also just started having those same niche lists, but we hired a VA to text message those sellers, and we started that a couple weeks ago, and we're getting leads, but we're also getting a lot of pushback from sellers, so they don't like
Sure.
text.
Yeah,
But
I understand.
those are probably the main ways that we're buying houses right now, and it comes in waves. 1 month the paid advertising is working great, and your networking buys or your referral buys are really low. And then the next month, your referral buys are carrying your whole business. So you got to kind of have multiple channels and avenues to buy and source good product.
As you look at the real estate brokerage community, the realtors, is that really much of a source for you for new product?
It is, for sure. I feel like it's getting more and more difficult with all the new rules out there, and I'm not a great agent, so sorry, Melanie and David, if I say anything I shouldn't say. But back in the day, and even now, agents have, I would call, quote unquote, pocket listings of some sort, and they have a few investors that they go to if they come across a client that has a house that's not fit for the market, maybe, or needs to get that cash in 3 weeks, and that's where the investors and the relationships come into play. So I think we're going to buy 30 to 40 houses from real estate agents this year.
Okay. So when I was doing commercial deals, the brokers all knew that I would close quickly.
Yeah.
And I was going to not mess around with them. It was just simply, I knew what I could do with that land or not. And if it was right, I would go ahead, and they would get paid. And I think that's really important, is to think about, what is the realtor looking for? Well, they're looking to get paid. They don't want to be strung out. So if you're going to have a reputation for being a good, solid, quick cash buyer, it's going to make a big difference.
Absolutely. Well said.
So I guess we can jump over the question of surface fix versus gut rehab. You're all probably just going to tell me that you prefer to do a surface fix so you could resell it, right? But a gut rehab would depend on the numbers, whether you truly could grasp hold of the budget and not feel that you had potential pitfalls where you open up a wall and you find no structural support. I've had that happen in a commercial deal, rehab, where you better darn well brace the building, it would blow over.
Oh my God.
But any quick comments on gut rehab versus surface fix?
Yeah, just real quick. Gut rehab is going to give you bigger risks, so you need bigger margins to account for that. So I think, if you look at my typical contingency or my typical buffer that I'll put on a rehab is usually about 10%. So on like a $20,000 rehab, I might, account for maybe a two grand variance, $2,000 of surprises coming up. But on a $100,000 rehab, now I've got 10 grand of contingency there. So in case we do open up the wall and we find, oh, there's mold, there's termites, we've got to take care of this.
How about you, Melanie?
Yeah, I would totally agree with everything he said. It's there's such a variance that you just have to be really careful. Gut rehabs are an unknown, and houses can pull all kinds of tricks on you. I've discovered. So when it's cosmetic or slightly more than cosmetic, that's my favorite. I think that's probably everybody's favorite. You could get in, spend less money, and get out. So yeah, gut rehabs are a challenge. I've done them. I've moved staircases. I've done that kind of thing, but only when you're confident you've got the margin at the end, should anything crazy happen, you can still have a profit.
But you, Lucas, doing any gut rehabs?
We won't, not even if the numbers are there. But we know people who that is their niche, but it's just, we're not set up for that. We don't know that as well. We like to get in and get out, especially in this market. When I would call surface rehabs are, new kitchens, new bathrooms, lighting, flooring, paint, but not moving stairwells.
Right.
That's great for whoever wants to do that.
No room additions.
No room additions. Yes, they more like, I feel like those type of people more like, seeing the house transformation than actually making money. So we're in this business to make money, and in my experience, the way we're set up, we don't make any money. The bigger the rehab, the less money we make.
That's really good wisdom for everybody that's on the call today. And when you resell your products, do on the resale side, do you list that on the MLS? And if so, are you listing your own product? Melanie?
Yes, sir. I got my agent license just for that, just so I could list my own product.
Okay. How about you, David?
Yep, I do.
Okay. Lucas, are you all listing your own property through Magnolia Real Estate?
Magnolia lists them. Yes, I used to list them personally, but I found out my time is just best spent other places, and so I passed that off to a Magnolia agent, and they take really good care of me.
Fabulous. Okay. So this is sort of a question before we get into any questions and answers. Are you all surprised that there hasn't been a major market correction given the tumult in the U.S. today or the United States?
Yes.
Okay. You're sort of in disbelief over how everything's still just floating along.
Yeah, it's unbelievable how, it's the hottest real estate market we've ever seen in our lives, maybe, and we're in the middle of a global pandemic. I still can't believe it.
Yeah. David?
Well, I'm not surprised, and the reason for that is because the Fed has been inflating it. So they've lowered interest rates to just about nothing. The bailouts that have been given to people of unemployment and all that stuff. So once the interest rates go back up, I think you're going to see the buyer pool pull back. Once we get out of this COVID environment, you're going to see more listings coming to the market. And that's when I think there's a chance that, this bubble eventually pops and we start going back the other way.
Certainly, if you look at the experience of countries like Japan, which has had really low, even negative interest rates for a long time, it could go on for a while. Mm-hmm. Melanie, are you surprised at all that with the market, just in general? Are you kind of like, wow, this is amazing?
I am amazed. I am amazed that what you see on TV and then what you are living in your regular life just doesn't match. It's just we're not having the issues that seem to be like all the dire predictions aren't happening. They're just not happening.
Right.
Like I said in the beginning, it's a cheerful market. It's people are excited to buy. People are excited to sell. I mean, I'm optimistic. I really feel like it could go on for longer, depending on what happens in the next, few months.
And certainly it's a market that's segmented between those who have money and have jobs and those who don't. The ones that don't are probably in a lower earnings bracket anyways. That is not going to be where the happy stories necessarily are, but it's going to be the people that have been able to work from home and continue to be employed and have money, there's enough demand there that they're keeping the market going. Dan, do we have any questions and answers that you'd like to read?
So a couple of things. One, Lucas, do you leave the basement finished, or do you rip them out and leave them unfinished? Or what's your thoughts on the basement situation for houses, maybe especially if you're going to rent them out?
Yeah, so on rental properties, I like my basements unfinished because basements flood, especially around here. If it has a finished rec room, and this really goes for renting or selling, if it has a finished rec room in good shape where I could just paint, put lighting up and flooring down, I'll leave it. But if there's any work that needs to be done to it, we'll just rip it out. As far as finishing a basement from scratch, and this is more on the retail side of things, we'll pretty much never do it unless it's on a super, super small house. We just don't see the return in what it costs to finish a basement.
Yep. Great. Excellent.
Anybody else want to comment on that?
I think he said it exactly right. Yeah, we do the same thing.
Okay. So Warren Buffett's got a few rules of investing.
Does
one
he?
of them- yeah, number one, don't lose money. And number two, see number one.
Love it.
So with that kind of theme, you may have made a mistake yourself, or maybe failed on something yourself, or one of your friends or somebody. Has anybody got any good stories that might help other investors avoid mistakes or avoid fails in the future, so that they don't violate rule number one, losing money?
Well, I think the best thing to do is get a coach. I got a coach in the very beginning. I paid for his experience because I had none. So when you have no experience, you've never done this in your prior life, you have nothing to draw on when you come to an issue, when you come to a problem. But if you have a coach, you can draw on their prior experience and their prior knowledge, because they've been there before. They've probably dealt with that issue before. Because real estate, as my first coach used to say, is really simple. It's not that complicated, but there's a lot to learn. There's a lot to learn about all the little things that could go wrong. So I think if you don't want to lose money, then you do get some advice, and you have some mentors, you have a coach, and you listen to them.
I think that's,
or you do lose money. And I've lost money in the process, but I always think of it as I either win or I learn. So I don't really use the word lost. I don't really use the word fail. I just think to myself, okay, I learned a lot on that one, and I want to take everything I learned and I want to make the next one better. And so it's been kind of a constant improvement for the last 6 years. Just, this one's going to be better. How can I make this one better than the last one? Whether it's negotiating with the seller or rehabbing the property.
great. Yeah, I think that's wonderful advice, not only in investing, but in life. So
Yeah.
wherever you want to, excel at, having a coach helps out a bunch.
How about you, David? What have you, what's your thought on that?
Yeah, it's really well said, Melanie. I think everybody on this call has a coach or a mentor. And it was when I tried to go alone on that first property that I made all these mistakes and lost all this money. And, it was really stressful for me and my family at that time, because the problems would come up at the house and I had nobody to turn to for advice or knowledge. And so I was bringing home all of those problems to my wife and my children and just stressing them out. So it was a really hard time for me. But after that, I got around, a network of people, and I hired a coach, and I had people advising me on what to do. And Dan, when you say, don't lose money, number two is see number one. That's exactly right. And in investing, you lose money, you either make money or you lose money when you buy the property. The second you buy the property, whatever price you paid for it is going to determine whether you lost money or you made money. And people don't all the time realize that. They think they can buy this property and then do something with it that's going to make a profit. But the successful investors know the day of closing that they've made money on this deal. And I've seen that time and time again.
Lucas, what are your thoughts?
Yeah, very similar. So I'm not as good of investor as Warren Buffett. So unfortunately, I still do lose money. But it was, especially the first 5 years, it was a grind. It was a struggle. And we still lose money. We lost 39 grand on a house this month. So it's a house I bought 2 years ago, but it happens. And like Melanie said, just you got to learn from that and have your successes be a lot more than that $39,000 loss that you took. So you just work on minimizing it and sticking to your niche. I too have a coach or a part of a national mastermind that I pay a lot of money to be a part of, the best and brightest investors in the country. And then we also started a little coaching program ourselves to help local investors build rental portfolios if anybody's ever interested in that.
Excellent. Any more questions, Dan?
So Lucas, you mentioned tons of offers coming on properties and everything. I don't know if you've got a funny or favorite offer that's come in that's top of mind when you're receiving 20 and 50 contracts on a listing. Love to hear if anybody's got a good story on that.
Yeah, I mean, I'm not the listing agent, Dan, so that might be better
Right.
suited for Melanie or David.
Got it.
So you're looking for a multiple contract story?
Yeah, if
Just
you
a
had
funny story. Anything.
some offer that came in that you're like, oh, or one that caught your attention, like the escalator clauses or any of those type things.
Oh, okay. Dave, do you have any? I'm not sure I have anything that like.
I got a quick one. I guess I wasn't, but well, we had a person in our office, Rachel, list her personal house this weekend in St. Charles, little 2-1, about 750 square foot listed it for $159,000. And I think there was close to 11 offers. And the agent was getting calls saying, hey, we're going to submit a full price cash offer. And the agent's telling them, don't even do it. Don't even submit that offer. That ain't going to cut it, because it went for 15 grand over asking. It's unbelievable when people are offering full price cash and you're like, not enough.
My goodness. This tells us the stage we're at. Well, I know a number of you have to jump off this call to get on with another call in case of Dan, and some of you, the panelists, may have to do the same. This has been a terrific real estate collaborative this morning. I really appreciate, Melanie, Dave, and Lucas being part of this. It's just been excellent. You had some wonderful wisdom and techniques that you're using and experience to impart. I know that our listenership will really appreciate it. We have recorded this, and once it's recorded, it will go up on our Real Estate Collaborative, therealestatecollaborative.com website. So you can go, anybody who either would like to listen to it again or has friends that they would like to introduce to it can do so. Again, I want to thank our sponsors that we listed early in the program. We do hope that we can get back to a live meeting this fall. At one point, I thought September 23rd, 24th was a possibility, but it looks now like it probably won't be. But I will keep everybody posted. If we don't do a live meeting, we'll do a webinar, and with the hopes that our December 3rd, I believe, date, we'll be able to be together again at the lodge, enjoying the wonderful breakfast that the collaborative has become so known for. So Dan, thank you very much for being our co-host this morning. And again, thank you, Melanie, David, and Lucas, so much for your contribution. We appreciate it.
Thank
With
you.
that, have a great rest of the day, everybody, and onward with the weeks ahead of living and learning. Bye for now, and thank you.
Thank you, guys.
See
Thank you.
guys.
Bye-bye.
Bye-bye now.